Hey guys, welcome back. I hope you had a really great day trading today. So today was Wednesday, November 13th, and we did have the CPI report today in pre-market. And it did show inflation up 0.2% month over month, 2.6% year over year, and shelter costs being the main driver of inflation. And markets opened with a pretty neutral reaction across the board. We did open flat, and then we saw a little bounce to try and make new all-time highs here, but we did get pulled back down. You could see if you were looking down below at Stupid Willie, we did make it to overbought right here, and then we pulled back down as soon as we got that signal. So very weak day today. As far as price movement, same thing over here in SPX. We did open flat after the CPI report. Small bounce, we hit overbought right here, and then right at that point we swung back down, closed underneath the 35 EMA, and flat on the day. SPY closed up 0.05%, SPX closed up 0.02%. VIX down 4.69%, so we are down at 14 for VIX. And in both SPY and SPX, we did close completely within the implied move today. And QQQ, same open here. We opened pretty flat, a little gap down to the 35 EMA, and then we did drop down. We got down to yesterday's low before swinging back up, so that was about 510. Then we swung back up just under all-time highs right here and pulled back away from that. So Nasdaq price action very similar to the S&P today, and pretty flat close over here today too, down 0.13%. VXN also closed down 3.42%, and we did close completely within the implied move today over here as well. And IWM was the biggest loser today. IWM likes to have the biggest moves in either direction, whether it's swinging up or down. We do tend to see the biggest moves in IWM, and we did open with a gap up above the 35 EMA. Could not hold that, and if you were looking down below right here on that gap up, we saw resistance right here pretty clearly. So a lot of times this signal line, when it's red, will actually coincide with that 35 EMA. So down here, we were unable to get above that red line. So when we gapped over the red line here, we got pulled back down, and we did take it all the way back down to oversold right here. And IWM did close down 0.99%. RVX down 4.8%, so small caps down, volatility down, and we did stay completely within the implied move here. And then DIA, we did open here flat as well, and first move was an attempt to get above the 35 EMA, and we got pulled right back down. You can see we printed just one blue candle right here, and so just like yesterday, 35 EMA did pull us back down. So 35 EMA is resistance right now, and we did see that red signal line as well. DIA did close green today, and you could see right here we were seeing a little bit of strength in Stupid Willie. So higher lows right here after we hit oversold right here, that was yesterday. Then when we drop back down, this is actually a bullish divergence because we didn't hit oversold again. We actually saw a lower high here and then a lower high here. So bullish divergence right here. We'll see if after the PPI inflation data report that we have tomorrow, if we can reclaim that 35 EMA. And of course that PPI report is going to play a big role in which direction we take, but if we're just looking at technicals alone, we are seeing a bullish divergence here in our secondary indicator. So DIA did close up 0.1%, and we did stay within the implied move today. So pretty flat across the board with the exception of IWM that did have a decent sized down day. Tomorrow we do have PPI in pre-market at 8:30 a.m. Eastern. We also have Jerome Powell speaking at 3 p.m. So be mindful of that. Jerome Powell does tend to bring a lot of volatility to the market, and with inflation back on the rise after our first rate cuts, it is possible that the market hears something that it does not want to hear or that hasn't been priced in yet. So 3 p.m. Jerome Powell speaks, and that is after the PPI report in pre-market. All right, so I think that pretty much sums up today. Let's go check out tomorrow's levels. Alright guys, so let's go. Tomorrow's implied move in SPY is between 594 and 600, and that is from options. The 30-day average volatility is a lot wider, 590 to 604, and I think that might even be more than twice as wide. The implied move is $3.20 wide, and the 30-day average volatility is $6.46 wide. So yeah, it's about double, which just goes to show you how much VIX got crushed in the past week. And then the implied move on Friday's contract is between 592 and 602. To the upside, the very first level to look for is going to be 600. That is the top of the implied move, and that is also where we saw all-time highs at the start of the week on Monday. So we did make those all-time highs right with that first candle of the week, and then we came back down to the 35 EMA, and then we've bounced on that level. So if this 35 EMA acts as a support in the morning, then look to 600 as the top of the implied move. And then the top of the implied move on Friday's contract is 602. If you're buying premium and you're bullish, then 600 would be a good strike to look to. If you're selling premium and you're bearish once we make the move to the top of the implied move, 602 would be a good strike to look to. So then right in the middle, we have that 35 EMA. If that doesn't hold as support tomorrow, the next level to look for is right here at 594. Let's call that 595 because today we bounced right on 595. And if that doesn't hold, the bottom of the implied move is 594. So if you're bearish and you're buying premium and you want to try and catch the move down on the day, 594 could be a good strike. And if you're bearish, or if we move down and you want to catch the swing back up, then 592 could be a good strike to choose. We do have this up gap. This is from last week. This is the election gap. Then we ran and then we gapped up here. And so far this entire week, we've been staying above that. So bottom of that is at 591. Typically when we fill a bull gap and we come back down to the bottom of the gap, we see that bottom of the gap as a support to swing back into the implied move. That doesn't have to happen, but it happens a majority of the time. So 594, bottom of the implied move for tomorrow. 592, bottom of the implied move on Friday's contract. And not a difficult trading range. A lot's going to ride on the PPI inflation data in pre-market. And let me know how you guys plan on trading this. Are you bullish? Are you bearish? What do you hope to see tomorrow? Let me know in the comments. And then SPX, the implied move tomorrow is between 59.50 and 60.20. That is from options. The 30-day average much wider again over here between 59.20 and 60.55. And the implied move on Friday's contract, 59.35 to 60.30. And to the upside, the first level to look for is going to be all-time highs. We made those on Monday. That is also the top of the implied move for tomorrow at 60.20. So the implied move, the all-time highs were actually at 60.17.31. So the top of the implied move is just a little bit above that. I am pretty bearish heading into tomorrow, so if we do come up, then I would probably be looking at 60-20, 60-30 bear call spreads, even though that is pretty close. That might be a little bit more risky than the 60-30, 60-40, but I do feel like that is a spread that I will try and play tomorrow. And then to the downside, the 35 EMA, this is actually to the upside. I didn't realize we closed underneath the 35 EMA here. So 35 EMA is just above us. So if we do break back above it, then look to the 60-20 strike. But if we do see it as resistance, and right now ES futures are down, so if we do come up and see that as resistance, then 59.50 is the bottom of the implied move. 59.35 is the bottom of the implied move on Friday's contract. Bottom of this gap is at 59.27. I'm going to call that 59.30. I'm going to round up on this one. And then the 30-minute 200 moving average is right here underneath all of that, ready to catch us if we do drop. And to the downside, because I am bearish heading into tomorrow, I don't think that I would actually play this strike, the 59.50. I would take it out to the next one. 59.35 is probably the closest spread that I would sell. That would take us into the gap here. And one more level right here, I just want to mention that 59.60. We did see this on Tuesday, and then today we bounced just a little bit above that level. So small support right here, bottom of the implied move 59.50, 59.35 on Friday's contract, and then the bottom of this gap at 59.30. So not difficult over here. Then switching it over to QQQ, implied move tomorrow is between 508 and 516. That is from options. 30-day average volatility is $3 wider in each direction, 505 to 519, and on Friday's contract 506 to 518. To the upside, first level is all-time highs. That is at 515.58. 516 is the top of the implied move. 518 is the top of the implied move on Friday's contract. And in QQQ to the upside, I do think that 516, 517 would be a good spread to sell if we do come up tomorrow. And if you want to be a little bit safer, then 517, 518. And then to the downside, so I think I mentioned this 35 EMA to the upside. If that holds as resistance, and NQ futures are down 0.26%, so 35 EMA will likely be above us at open. And I can't say that with certainty because PPI is coming out at 8:30. So, but if we open underneath here and that 35 EMA is a resistance, then look down to 510. That is where we bounced Tuesday and today. If that breaks 508, 506 is the bottom of the implied move on Friday's contract. Bottom of the gap from last week after elections is at 505. And then the 30-minute 200 moving average is over here. So if we do drop tomorrow, I don't think I would sell 508, but maybe 506. So maybe sell 506, 505 bull put spreads, maybe even 507, 506. But that 508 does look too close, even though it is the bottom of the implied move. So that is QQQ. Again, let me know what you guys think here and how you plan on playing this. And IWM, the implied move over here for tomorrow, 232 to 238. That is from options. The 30-day average volatility is $2 wider in each direction, 230 to 240. And on Friday's contract, 231 to 239. And to the upside, we have that 35 EMA. We did see that as resistance yesterday, and then today we gapped above and tried to get above it that way, but got pulled right back down. So 35 EMA, and it is above our implied move at open. So it'll be coming down this way, and it could smack us down. But if we do get above it, 238 is the top of the implied move. 239 on Friday's contract, and 240 is the top of the 30-day average volatility. I would be leaning more at 239, 240 bear call spreads if we do pull up to the top. And to the downside, we do have 232 as the bottom of the implied move. The top of this election gap is in tomorrow's trading range. That is also 232, so that lines up right with the bottom of the implied move. 231 is the bottom of the implied move on Friday's contract, and we've got that 30-minute 200 moving average coming up, and that looks like a really great target. If we do drop, 232, 231 bull put spreads could be a good spread, but I think that I would want to pull that out a little bit lower. Again, that is just my opinion because I am bearish, and I think that we could definitely see a pullback down to this 30-minute 200 moving average, and maybe a better strike to look towards tomorrow would be 231 and then 230 bull put spreads. So this one right here. And again, keep an eye down here on Stupid Willie if this is your indicator. We did see a rejection right here. The signal line is still red, and we definitely still have room here to move lower. So look for a place where we possibly could see support. That 30-minute 200 moving average really sticks out at me here, especially with this being this wide and that rejection today. So, and then lastly, DIA. DIA, the implied move for tomorrow is 436 to 444. That is from options, and that is right in the middle of the implied move for the entire week, which is 434 to 447. And you could see that we are right where we closed last week. So we are flat on the week, and that 35 EMA is right above us. And we've had a difficult time once we gapped up and made all-time highs on Monday. We came back down to that 35 EMA, and we've been chopping around that level. Right now the signal line is red. However, we did see higher lows on Stupid Willie, so just be mindful of that. Of course, inflation data could override this bullish divergence, and if it does, then look to these two strikes as possible targets for the week. All right, there you have it, guys. Let's see what happens tomorrow. I don't think I mentioned at the very beginning of the video, but please, if you find value in my videos, give this video a like, subscribe, turn on notifications, and share this video with your trading communities. I really appreciate you guys. Have fun, trade safe, make sure you take profits when you're up, and I will